Good morning, Saturday, 4/5/2014. We're going to look at the S&P 500 once again on a weekly, monthly, and daily. Daily, weekly, and monthly. The U.S. markets have gone into calendar 2014, and we have clearly told everyone that there is going to be, in these broader indexes, a 10 to 20% correction. One of the things that we are looking at on this weekly is how the weekly sell signal from the top, that's that big wick going down. This is the 10-week moving average right here. And I'm going to give some of the numbers on that 10-week moving average, and that's going to be 1842 on the support level of here. That 20-week moving average is at 1828. That's the red line, okay? One of the things that we're going to talk about is where we started over here in January, and we made the low over here. And this low, believe it or not, was a buy program that came in on the February side of these markets. So I'm going to just show how this low right here that was 2014. So the bear was in control going in to January. The bull got control right back with another higher high on the date was 3/2 during that week, and that weekly high was 1888 or 1883.57, and the low, well, it wasn't much of a movement because it was 18.344 on a weekly level. We came back and we have rallied up here and made another all-time high, 52-week high on the S&P at 1897.28. The weekly moving averages again are the numbers that I've given in that common denominator for the very short time frame. So once again, when we had the pullback there in January, the bulls came roaring back. But we cannot take out that top end resistance level, and we have a sell signal in this last week. Now, this is the weekly level. When I take a look at this monthly level, this diagonal trend line, I'm going to draw once again. These were the tops back in year 2000 and 2007. And basically, we had those big rallies, expansions during this time frame. We had one in 96. We had one back in the lows of 2003, and then it gave it all back. Now, one of the things that I'm telling everybody now is that this correction that we're going to get is going to be a seasonality one. We're in the month of April, and we have the high. So here, I'm going to blow this up. Now, here's the deal. I'm going to take this piece right here. We know what this bottom line represents. And we also know back in 2013 when it cleared it, which were the older highs in the 2000 and the peak there in 2007 and 2008. One of the things I'm going to be very clear about is the following. We are looking at the 10-month moving average at 1779, which is the blue line, okay? And I'm just going to take this piece of the chart here for now, and on this monthly level, the lower level of the 20-month moving average is at 1645. That's going to be the broader lower support level over time. I'm going to draw this part right here. This is your new year, okay? I'm going to say that there is a big reversal coming in the S&P. Some of these can be in the middle of 10 to 15% from the all-time high here of 1897. I'll draw a trend line here on this monthly chart And I'm going to start right here on this monthly high. And that was on 2-1, of course. And we came from the bottom up here. And that was your big move. Then we topped out right here. And this was on 3-1 starting the month here. This is 2-1. This is 3-1. Now we're at 4-1. What we will do is take the January monthly high. That is ultimately going to be the first support level. I mean the major support level. Then what we're going to do is we're going to take half of these monthly movements here, and that is 1820 on the current S&P 500. Now, in our market maker system, which we have complete detailed yearly formulas, is that we're going to look at those compared to the actual chart. So, I am going to say that at 18.22, which would be a half a delta in our system, is that 1792 is the equal part of the bull and the bear in our market making platform on the S&P with the yearly formula, and it doesn't lie. What I will show is that right up here was 1 3/8 delta positive, which was 1.38 in our system, which equaled 110 S&P rally points to the neutral zone of 1782.59. And our monthly calendar for the whole year in this model will never change. The daily, the weekly, and the monthlies will change, but not this yearly one. So basically, when we came down on the S&P on Friday, we were down here at one full delta up in our system, 1.00 ratio. That equaled 80.39 from the neutral zone of 1782. And in our world, it's a 4.51% gain still for the bull side of the S&P. However, we are going to come back down to 1782, and I can tell you that the half a delta range on this S&P on the level of 1822 will be your major support level. Now let us take a look at where the delta reversals are way up here, and we were extremely overbought. We never quite hit the 1903 area, but we did get to 1897, slightly above 1 3/8. That's a 110.54 move from our neutral zone of bull and bear. What I can say right now, the major support levels are going to be right here in this bull spread. It's going to be a half a delta at 1822.79, which the bull would be losing its momentum, but it would still have a nice gain of 40 points above the neutral zone once again. I am calling for a 10 to 15% correction, and I've said that before the year started, that we were extremely overbought in the S&P, and that this S&P on a monthly level, which a public indicator clearly states in the longer term, we're 93% in some of these public indicators that people look at and use. Now let's take a look at the daily. This is the daily part of these charts. And what I can say clearly, remember, we always look at the daily, then we look at the weekly and the monthly, of course. I'm going to zoom up just this part of the move. This is what we call a complete blow off top for the calendar day on Friday. I'm also clearly going to say that this rally started for the bull, and we called it. We got the short side of this up here in January, and then we got out and we had to go long. So this whole part of this bottom right here, we can clearly see by going right through here that we had a reversal on the other side of this rally point up to here. Then when we come off of these lows over here, we're just going to connect these right there. That's the longer part. The lower part right here is that support level and whatnot. Once we break this trend line, we will have a pit stop at the 50-day simple moving average, which is a public indicator, but that's going to be 1838 on this daily chart. So the actual 10 and 20 right here are getting violated. I will give you down here, and what I'm going to do here is I'm going to draw a horizontal trend line right across here. And once again, this particular daily chart at the 100-day moving average, which is consistent with what? Our yearly formulas. And when you take a look at what that delta is in our system there, we can clearly know that right here is 1822. That's a half a delta positive for the bull. That's that support level. Once it breaks, 1782 on our system is right down here where nobody's in control. The bull's not in control and the bear is not in control. Okay, having said that, we're going to be monitoring the options that we currently own. And what we do have in our option tree is we have various different strike prices for a monthly, and this is the one that we own right here. And that this put option, 1885, had a very big movement. That low, you could have bought the put options down here and look at the range in the put option, $18.75 on the S&P. So that is the ranges, and this is the put contracts that we have there. Now, the next one that's going to come into play is going to be the 1870 puts. And I'll tell you why. We broke above those highs with this reversal, and the put options that we're going to look at here now, we're going to start the earnings season on Monday, so there is going to be more volatility. And what we're going to be looking at doing here is we're going to take the calendar month of this particular strike price, and we're going to go right over here to 1820. And what I'm going to show you is the following. This put option, which is a May monthly put for May now, I can tell you right now, I'm going to make sure you can see this. Okay? This is a buy. This is extremely deflated right now. Yes, I will blow it up so you can kind of see it. There's not a lot of contracts traded. However, it is the best trade right here. These are deflated. And the low was $10.78. And this is a weekly level. So when we take a look at where we're going to buy this level, we're right up here, and these were the levels over here. These contracts have a long ways to go up, and they're going to go up. 35.50 was a high on the 3.9 weekly now. This is a weekly snapshot of that put option. Clearly, here is the put side for a daily chart, and you can see it. These were extremely wholesale for us to buy. That low was 10.78. Now, mind you one thing, that this is a May 2014 put option. And we're buying these, and we have already bought quite a few of them. This was that daily movement with that big sell down in the S&P on Friday. And that S&P ended up closing at 1865 with the 23.68 reversal from that blow off top high that we had right here. And not only that, I will draw a horizontal trend line right here at the body of these dailies. We've cracked it. The 10 and the 20 are coming into play. We're going to come down here, but I'm going to just tell everyone once again, the volatility is going to increase because we're starting corporate earnings on what day? Starting Monday. So it's very important to know how this volatility is going to work, and that the markets have had a significant pullback, and that volatility is here to stay. So we're going to be trading these and holding these put options, and then what we're going to do in the short time frame, we're going to go for an intraday level, and we're going to trade the 1870 put, okay, in April versus May. This is for intraday, and the longer time one, the May one, is for a longer period of time. So we are clearly telling people that this S&P 500 it's got a long ways to go down. And I can just tell you right now that we haven't been wrong with the volatility. And we are overbought on the monthly level. We have got a turn on the weekly level, and this is that weekly level. And I'm only going to say one more time, from the weekly level to that daily level, is that they are relatively about the same with the daily indicators here. The weekly ones come into play as well. So we're about to break these daily simple moving averages. There is a big trade. This is a huge reversal on a daily level on a Friday, combined with the narrow range movements to the top. This particular daily has taken out three of these daily movements up. Look at the value of it. So we got a very clear picture. We are going to go lower. And we have the earnings season start on Monday. So from Monday to about the end of April going into May, we're going to see what a lot of these corporately earnings are going to be. And every movement higher to resistance levels is where we will take a look at this daily level, is how to get short, net short. And that's going to be the levels that we're looking at. Now, here is where he closes on this daily level. So when we come around on Monday, we can see that the markets are clearly selling off going into these earnings seasons starting Monday. And that will be the light week of earnings that start Monday. And this is going to be the second quarter of the year. And basically, we're done with the first 90 days. The 5-year expansion is over. And I will be much more thorough that I've always been. Is the following is that, listen, folks, when we come, we've already had 170 what 8% movement from 2009. But I'm just going to let you see where this particular low goes from the longer term structure. Rally, come up, and we met higher highs, and we did that same thing over here. The problem with this, with the bull, is that there wasn't any high volume conviction. This is the longer trend line, and it's going to come right there. I'm just going to show a snapshot of that, and that's going to be roughly, well, right below that 1820 support level. So it's very, very important that on this daily reversal in the S&P is that any move to resistance levels on this daily right here is we are going to do intraday put options. If we hit support and want to go higher, we'll do a call option, but we would only do them for intraday. We're going to be buying the May monthly for the longer term hold, and we're going to trade around that using the April contracts and whatnot. So it's my privilege to tell you, MMTs, that the volatility is going to increase. And it already is increasing right here. These were the highs right here. And so that was a blow off top. These markets right now, from a longer term perspective, are overbought. But then on the flip side, you got short term daily oversold conditions that will, yes, they will pop up, hit that resistance level before they make that next lower low. And I am telling everybody here and today and here and now, when we're out of this earnings season, I'm telling you that this whole index in itself is going to have a big correction, that it's been about 18 months before we've had a 10% plus. That is coming, and we're seeing the signs of it here. We're seeing how the blow off top has a much bigger distribution than these part of we had narrow range here and it pulled back. This was a resistance level right here. And now this is the part that we're going to focus on. Any movement down to support levels on short-term oversold will play for a bounce. It could be 20 minutes long, could be a day, who knows? We'll let it figure itself out. Just remember, the pit stop is down here at 1820. Now remember, the white line is the 50 simple day, and this line right here, the yellow kind of dark color, is 1825, and that happens to be a 100 simple day moving average on the S&P update on a Saturday right now. You will, during the summertime, get that 10 to 20% movement, and the broader equities themselves on an individual basis, some of them have already hit their bear trend reversals, and we'll cover those individually right now.